Hong Kong's external trade leapt 25% in the first quarter 2011, a remarkable performance. But what about the rest of the year? Joining us is the chief economist of the HKTDC, Edward Leung. Edward, thanks for joining us. 25%, it's a massive figure. What about the rest of the year?
In the second quarter, our export growth will slow down, and probably a moderate recovery will happen in the second half of the year. Overall speaking, we are going to revise our trade forecast for this year from the previous anticipation of 8% to 12%. And I do consider that the price increase will be much more important than the volume increase.
And looking at the first quarter, there was, of course, the Japanese disasters, the earthquake, the tsunami, the nuclear problems. Was that a major problem for Hong Kong trade, though?
We have already taken into account of all different adversity that Hong Kong's international environment are now changing. So I think our forecast is rather objective.
So would you say that the Japanese disaster was a particular problem for Hong Kong electronics?
Our electronic export record a very impressive growth, and in the second quarter, because of the Japan earthquake, I think there will be some adverse impact on the electronic trade. And for the rest of the year, it is very much depend on the consumer's appetite for the new type of products, for example, smartphones, others. And we still have a confidence in the sustained growth of the electronic products.
Edward, of course, an ongoing problem has been the civil unrest in the Middle East and in Africa. Was that something that held up Hong Kong trade into that region?
North Africa and Middle East only account for a very small proportion of our exports, so that the market disruption there will not have a significant effect on us. And in particular, our export to UAE, which account for over half of our export to the region, increased by more than 40% in the first 4 months of this year. So that our export to the North Africa and Middle East indeed did not really record a substantial decline. On the other hand, what we are more worried about the Middle East crisis is on the oil prices. Oil prices rise will push up the inflation globally, as well as probably will slow down the global recovery. That is the main worry.
You alluded to rising production costs being a problem for Hong Kong manufacturers, and also, of course, inflation. These are really big worries, aren't they, for 2011?
I think so. In the first half of the year, Hong Kong's export of unit prices increased more than 7%. And then we are still expecting that the cost escalation in China, particularly in the labor cost, will persist in the rest of the years. According to our survey, almost 60% of our survey company indicated that in the past few months, their labor costs increased more than 10%. It is really an alarming trend.
And looking at a sort of round robin of the international markets that Hong Kong has, the EU and the US, of course, the major ones, are there going to be problems over the rest of the year, or do you see a recovery?
The EU, generally speaking, what we put it in the European market, was troubled by the sovereignty debt crisis. However, Germany in particular has long been performing remarkably well. Overall speaking, our company's confidence in EU did not deteriorate too much. They are expecting a stable business over there. On the other hand, the US, after the first quarter recovery, it seems that slowed down in the second quarter. People are worrying about what happened. But generally speaking, we do believe the US will continue a steady growth in the rest of the year.
And of course, the major market in the world, certainly the emerging market, is China. How will Hong Kong actually develop that market, do you think?
For the Chinese economy, China is doing its best to boost up the domestic demand, in particular the private consumption. For example, on the positive side of the wage increase, it means that people's consuming power will rise because of the wage income increase. And also the Chinese government is going to reform and providing better social security and social services to its citizens that will try to persuade people to save less but spend more.
But to what extent is Hong Kong at an advantage to take advantage of the consumer market in China?
Many of our Hong Kong companies are now today producing in China, manufacturing in China. Then what they best to do is to change and convert themselves a bit from only producing as well as to selling and marketing as well. The challenges is that not everyone has the knowledge and capability change from a producer into a marketeer. That is something that some company will succeed, some company will be less successful. And we believe that we encourage people try to find out the opportunity. In the future, opportunity will be there.